Recent bank collapses. Let's bring in Greg McBride. He is Chief Financial Analyst at Bankrate. And Greg, you've been listening to our interview with Alexis. What do you make of the action that the Federal Reserve, FDIC, the Treasury has taken? And are you confident that we won't see this impact at regional banks?
It was the necessary step, because what would happen without that provisions that they put in place is that a lot of businesses in particular that have uninsured deposits at banks all over the country, they would have been moving that money en masse yesterday. And that's the type of thing that could lead to a severe disruption of the banking system and bring down the overall economy. The thing about a run on the bank is it can bring down an otherwise good bank. And that's what was the idea, was not to prop up bad banks, but rather to prevent a good bank being taken down by an unnecessary surge in withdrawal requests. So very much a needed step to stabilize the financial system. But again, with interest rates having gone up at the fastest pace in 40 years, we may well see some more bank failures, but they may not be the magnitude of what we had seen the past couple of days.
Okay. Well, as the fallout continues from these two bank failures and takeovers, what do people need to know, Greg, about just the security of their bank deposits today, right now?
If you're a consumer and your deposits are within the bounds of FDIC insurance, or in the case of credit unions, NCUA insurance, you're fully protected and you can go about your day and worry about something else. In the event that a financial institution fails, if your deposits are fully covered by deposit insurance, that's their problem, not your problem. Management loses their jobs, shareholders get wiped out, but the insured depositors are protected. If you have deposits that exceed those limits, I'd work to move that in the sense of getting it covered. And you don't even have to leave the bank. You can just open accounts in different ownership categories, so you can keep your money at that same bank. But for example, a married couple can actually have 3 different accounts, in total $1 million worth of coverage at the same bank, by each having individual accounts and then having one joint account together, just as an example.
Right. So are there any questions that people need to be asking themselves if they are with a smaller bank then?
I think the bigger question is just, making sure, are your deposits fully covered by deposit insurance? If you're exceeding that $250,000 limit, that's what you want to fix. You put the money in the bank so that it'd be there when you need it. Well, having money in the bank that's in excess of the deposit insurance limit, that's like riding around without your seatbelt on. That's just inviting disaster. So I would fix that. I think that's really the only thing that from the consumer standpoint, that people need to really focus on at this point.
Right. Well, the president reassured all Americans about their deposits. So do you think there is any need to, diversity if you are a typical American with an account under $250K?
Not from the state fee standpoint. If you're under $250,000, your money's protected. Now, you may choose to move your money to another bank because you get a better rate of return or you get lower fees. And, that's the type of comparison shopping you should be doing in any type of environment. But from a safety standpoint, as long as you're under that $250,000 limit, any failure would be the bank's problem, not yours.
All right. Greg McBride, thanks so much. Appreciate it.
Thank you, Karen.
Hi, everyone. George Stephanopoulos here. Thanks for checking out the ABC News YouTube channel. If you'd like to get more videos, show highlights, and watch live event coverage, click on the right over here to subscribe to our channel. And don't forget to download the ABC News app for breaking news alerts. Thanks for watching.